Let's go back to investments and give you a brief rundown of the ownership structure of non-qualified investment accounts so you can use this information to determine what is right for you and your household. If you have already established non-qualified investment accounts and you just don't feel informed about them, we're going to have a tip for how you can be more informed in the future. If it's something that your spouse has been managing on their own, then you do want them to walk you through how they've chosen the investments, the balances of that account as we previously discussed, but also ownership structure is incredibly important. And there are many different types of ownership structure, but we're going to give you some common ones that you see in a marriage and how they can impact a couple where there's an inequity in terms of the income that's earned. First is individual or individual transfer on death. An individual account is just like it sounds. It's a non-retirement account that is invested for the benefit and the ownership of one person. So it would be your spouse open an individual account in their name, or you would open an account in your name. And there does not have to be a listed beneficiary on that account, but my preference is to open up an account that's individual transfer on death, which does give you the ability to have direct beneficiaries so that account doesn't have to go through probate in the event of either of your deaths. I have seen individual transfer on death be the account ownership structure of choice when I have a couple who does have a scenario where they either married later in life, maybe they brought different amounts of assets to the table, or there are children from a previous relationship, and maybe you have a difference of opinion on how assets should be dispersed in the event of your spouse's death or your death if you have children from a previous relationship. This is another scenario that can be addressed through a type of ownership structure called joint tenants in common. So joint tenants in common is an ownership structure where you and your spouse, or you and another person, it doesn't have to be your spouse, it could be another family member, it could be a sibling, it could be a friend. But when establishing that joint account, you also establish ownership percentages on the front end. So say, for example, in the scenario where you get married later in life, maybe your spouse brought $80,000 to the table and they have children from a previous relationship. You brought $20,000 to the table. You have children from a previous relationship. You have different opinions on who should be listed as the beneficiaries. Maybe you don't want to leave all of it to your spouse in the event of your death. Joint tenants in common may allow you to establish that account and say that my spouse has 80% ownership of this account, and they can choose their own beneficiaries for what happens to their 80% in the event of their death. I'm the owner of 20% of this account. I have my own separate list of beneficiaries, and each of you may be each other's primary beneficiary in each of those scenarios, but at the secondary beneficiary level, maybe you have those differences in terms of how it's distributed amongst your children, nieces and nephews, siblings, or loved ones. And then lastly, joint tenants with rights of survivorship. Joint tenants with rights of survivorship means that you and your spouse are equal and undivided owners of the account. As odd as it may sound, you both own 100%. And in the scenario where one of you passes, the other doesn't even have to do anything. They don't have to file a death claim. They're already 100% owners, so it just goes into their name only. You can also add beneficiaries to a joint tenants with rights of survivorship account. And this is a type of scenario where if you're on one accord with the ownership, there's no interest in determining who owns what. You don't have any concerns about who's the listed beneficiaries. Joint tenants with rights of survivorship account is typically a very clean and easy way to hold joint assets.